Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, May the 30th. The year's 2021. Let's talk trading. It's time for the weekly open and gap. And as you know, these videos are for educational purposes only. Your results may differ from mine. So let's just jump right in and take a look at the weekly. And as we look down the column, we see we have one pair that has not filled the weekly open gap. The pound is filling, and in fact, we are 24 pips above the weekly open at the moment. And as you can see, we're in the upper wick zone of the previous week. On the daily, we are definitely putting in the opening range for the week. And remember, Friday's bar was an inside bar. So right here, we had an inside bar. We'll see that again in a moment. 557 pips above the yearly open. Notice we have 1, 2, 3, 4 green days in a row. Let's see if the pound continues or if it will reverse. Now, I mentioned that inside bar, and as you can see, we've got a lot of inside bar action here according to the dashboard. So we're looking for a break to the high at 42.07 and a break of the low at 41, call it 35. So those are a couple of numbers to keep in mind as you trade. You can see we've got the weekly inside bar that happened, it looks like 1 week ago. And with that long trigger being 42.18 and the short trigger, let's call it 140.90. And the range on a holiday weekend, not much of a range as to be expected, with Monday being a holiday in the US of A. We might not see much happening. Then again, some of the traders from around the world might want to take advantage and move things around. We've already taken out the daily pivot at 41.77. The pivot was above the open, but within the buy zone here. But we had a gap down, so the trigger from the open was pretty much long. Rats range is too low. And by the way, if you don't have the latest version of the rat zone, you're not going to have this. I noticed there was a trader. I don't think they had the using the latest version of the rat zone. So you need to get that. Pivot trading plans. So if we're near the pivot or R1, it says the bias is short. We've got R1 at 1.4218. R1 is above the previous day's high, I do believe. Yesterday's high, R1. So look for, if it breaks yesterday's high, look for it to take out the R1. Pivots, only one missed pivot this month, and that was at 39.63 down here. Oh, I forgot. Let's take a look at the weekly. So far, we have a missed pivot today, but we also have one in May and one in April. So these two pivots right here need to be filled at some point in time. We've got 1, 2, 3, 4 weeks in a row that we're up, and I think we saw we have 4 weeks in a row up, up, up. On the monthly, we took that out a long time ago. As you can see, if you look at right where price is now and you look left, you can see we're in some wick zones. If we break above, we might be in rare air. So something to keep in mind are these, look left on the chart, notice what these levels are. And it looks like it's about 143.65. So let's see if price gets up that high. And that was back in what, March 2018. So just keep those numbers in mind as you're trading. High touch alert here. You can see in and out of that upper wick zone, in and out of the lower wick zone. Now, somebody was asking about wick zone versus rat zone, which should they trade? You have to understand a wick zone is a breakout trade. You're breaking out of an area, whereas a rat zone is a reversal area. You're reversing off of the current daily high or low. Now, because the wick zone is static, once those lines are placed, they don't move until the next day. So if you're trading all day, those lines are fixed, as opposed to the rat zone. Price can put in new highs and lows, so that zone's going to move around. But if you think about it, at the open, the rat zone and the wick zone are going to share common lines, that open price. And so if price moves down, but let's say price opens and it moves down, well, that rat zone is dropping. And pretty soon, if that previous candle just so happened to be actually the color really doesn't matter of the previous candle on the daily, it's just that price would be dropping. Actually, it does matter, because if it's a close, if it's a red candle, so price closed below the open, and so then on the next day when price opens, it usually opens near the close. If it drops, that rat zone is going to be partially in the wick zone. It might be fully contained or partly contained, and that rat zone could also go past the wick zone, just depending on how far price drops. So, or on the other side, if price were to go up here, say it were to go up to 42.40, well, then between 42.40 and 42.20 up here, that would be the rat zone, which would be above the wick zone. So it's just something to keep in mind. So, but the trader wanted to know which one. Well, rat zone's more for intraday or traders, that they're going to sit there and manage the trade and trade the triggers for the day. Wick zones, you can do those as almost a set or forget. Price gets in the wick zone, you could put one cancels the other. It's pretty simple. Okay, let's look at the ranges. We looked at these for last week, but as you can see here, not much of range, 0 percentile. But that last week, I mentioned this in Friday's video, it was just not much of a range. And the week before, I mean, you can see in the week before that, we just don't have those ranges happening here. Nor did we break out. That's why we had an inside bar. Well, if we take a look at the monthly, because we're just about to wrap up the month, you can see for the month, we've actually, we beat the last 2 months range-wise, high minus low. Previous high, we broke out. Previous low, we did not break out. Really nice breakout. In fact, at the 83 percentile. So anybody taking that long, they'd be up 225 pips at the moment. So this month's about to wrap up. I don't know if you are a day trader or scalper, or if you're a position trader, swing trader, but definitely consider those monthly highs and lows as reversal points, and the monthly open too. You can, trade, Get that monthly open, trade in the direction price is going, put your stop in if it crosses below. Let's say it goes up and crosses below, get your shorts on, put your stop losses in, and you can maybe ride it for a while. Like with the pound, if you're short, they pay you swap. If you're long, you have to pay them. So that's usually a minor consideration, but it needs to be taken into account because we're talking about money and every penny counts. And the high minus close for the rats, you can see we moved off of that high by 198 pips last month. So far this month, only 36. Close minus low, on the other hand, you can see the last month was 142, and then in May, 398. So there were some huge gains to be made if you do rat reversals off of monthlies, and ditto for weeklies. Once again, these are all various methods, and you have to pick the method that fits in with your portfolio, your your emotional style, your when you can trade, your schedule. So there's so when somebody says what should I do, I usually just say, well, trade horizontal lines. But then you just have to pick which horizontal lines you want to trade. And here we have, the Walmart lines, along with some daily highs and lows and the H1 opens. But you can see here we've got the Walmart at the 42.00. We've got the short at the 41.90. There was a previous H1 was at 96. We broke above that. You can see right here. In fact, we almost opened right on it. So definitely moved above it. Something to consider. Now, normally this is on the 5-minute chart, but I just wanted to point out something to you. Just the concept of higher lows and lower highs. And I have, once again, using 34 bars only because that matches the setting of the 3LZZ, 34 pretty much. But, you look back, you see a 3 ball was put in. Then you see we got a lower high. Price dipped below it a couple of times and then shot up. There's money to be made. And so, once again, this is daily. So, these candles can definitely have some range to them. But if you look here, what happened here? It put in a low and it fell below the low. So just as a simple trade, you look for the lowest high here, you go long, you exit, possibly reverse, and you can just do that. Now, I usually do it off of 3 balls, but you can do it off of 1 ball. So you can see we had a 1 ball. There was the lowest high. You can see 3 days tested it, finally broke through. And then this was probably a 1 ball or 2 ball at some point right here, but it moved to the 3. But once again, you take the short at the highest low. There was money to be made. You can do that. I mean, but somebody go, well, hey, you know what? You're just trading out of the wick zone. Yeah, well, that's true. Well, why didn't you trade out of this one? Well, you could have, but this is a different trade. So it's just something else to look in your arsenal. Like I said, we do it on the 1 minute. We do it on the 5 minute. We look at these levels. You can see here what happened. It's 24 pips above that level. And so now it's putting in a highest low. So possible sell trigger here. There's a 3 ball with the short bias. So you just go short. So anyway, fellow traders, I hope you're having a fun and safe Memorial Day weekend. And, if you have any questions, feel free to ask out there in YouTube land or on the Facebook, on a forum. I like doing it in the public so more people can benefit from the Q&A. And as you sit down at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.